But any questions that you guys have about bridge loans, really anything in general, I'm a mortgage lender. So if it's not bridge loan specific, but it's mortgage lender specific, feel free to ask me it as well. I won't be pissed if you ask me a non-bridge loan question. Like, we're here to start conversations. So yeah, I mean, if you can in the chat, those who are here, have you heard of bridge loans before? Like, is this something that you have some familiarity with, or is this the first time that you've heard about this? Just let me know in the chat. I would say biggest thing about bridge loans is it's great for people who own a home already, right? Can't really do a bridge loan for someone who doesn't own a home yet because we need the equity from their current home in order to be able to purchase that new home. So think of it like it's seriously bridging the gap. And sometimes that confuses people. But we are essentially doing kind of like a HELOC or a cash out refinance on the client's existing home. That's awesome, you guys. Cool. So yeah, essentially what we're doing is, the buyer has their current home, right? And in that current home, they have equity, right? And they have a mortgage payment, So most lenders are going to count that mortgage payment against them when they go to buy a new home. So it can make it a little difficult if you don't have a ton of money sitting around to purchase a home, a new home, non-contingent on the sale of your previous home, obviously without selling. So this is kind of a solution to that without having to sell your home first or get it on the market first or have an offer first. The bridge loan is going to allow us to borrow from your current home, whatever the down payment is. I go about this a couple different ways. Like a lot of programs have something called a recast, and we'll talk about that today as well, because I think it goes hand in hand with bridge loans. But you don't necessarily need to put, like, let's say you have your buyer slash seller and they say, okay, I'm going to list my house. I think it's going to be worth 450. Our loan's 200K. So, we plan to put 200K down on our next house. Well, if we're doing a bridge loan, we are borrowing that 200K and paying it back, if that makes sense. So I don't necessarily want them to have to pay interest on the entirety of that 200K if they have that bridge loan for a couple of months. So in that case, I may recommend that that client put the minimum 5% down on a conventional loan for a second home, or maybe we do an FHA 3.5% down. And then I would recommend that they recast and put more money down later. That way, they're not having to pay interest on that. If you're like, gosh, Jamie, that makes no sense to me at all, totally understand. Like, you can reach out to me anytime with questions on this. I'm going to kind of run through the presentation and then we can kind of see what questions we have from there. But that's the lowdown. So we kind of talked about, what is a bridge loan? Your clients are going to make an offer on their new home before their old house is sold. Who can benefit from it? Obviously, you have to have a house, like I said. So those clients that are really nervous to start looking for homes because they're like, I'm not going to be able to sell my house in time. And that doesn't really need to be an issue if you can get them qualified for a bridge loan. I think biggest thing about bridge loans is their portfolio products. So as opposed to like a conventional loan or an FHA loan where everyone is following the same guidelines, maybe they're adding some additional rules on top, but we're all following the base mortgage guidelines. A bridge loan is going to be made by the company. So like my bridge loan has specific, facts and features and qualifying items that other bridge loans don't. I think it's important, as always, to talk to a couple different lenders and try to figure out what solution is going to be best for your clients. Because they'll be doing two loans. They'll be doing their new purchase transaction and they'll be doing the bridge loan transaction. So it really needs to match up with what their goals are. And they really need to feel like they can communicate and get along with the lender, because handling two loans is double. It feels more than double. For a lot of my clients. Like, I don't touch base with all of my clients every single week for a call, but I do touch base on my bridge loan clients every single week because they're literally dealing with two loans at once. Now, it is easier than trying to sell your house out from under yourself while trying to get into a new house. But that's just something to keep in mind. Yeah, it's good. Like if kids are still in school and stuff, we give you a couple months to sell your home. So that's nice. We talked about this non-contingent offers, purchase before someone else gets their dream home. So at the beginning, I had talked about, if you are competing for your client's dream home, and you're up against a non-contingent offer, you can bring that bridge loan in, make your offer non-contingent because we're borrowing that money from the sale of their home, and we are discounting their current mortgage payment. So kind of making it easier for them to qualify, kind of fast forwarding to when that home's gone. Definitely, if you need to relocate quickly, this is a great idea. The bridge loan I can get done sometimes. If you come to me in advance, I can get it done in 2 or 3 weeks. I would say average closing timeline is 30 to 45 days. It is good to get this guy in before the weekend. So if you do have a client who you know needs a bridge loan, no matter what company they're going with, it's a really good idea to have that application in sometime during the week. Most bridge loans do need a full underwriting analysis as opposed to the automated underwriting that we do for pre-approval. So that's something to keep in mind. It can decrease stress. Having 2 mortgages doesn't always decrease stress, but it can decrease the stress of buying and selling. Our specific program, like I said, I'm not going to go super into detail because I want this to kind of be an entry level thing where you can talk to people and like see what the different options are. But we can do a loan amount as little as 40,000 up to 300,000 right now. It is a portfolio product, so I have gotten an exception to go slightly above, but that's just something to keep in mind. Another thing is their new purchase has to be done with the same company in most cases. So if I'm doing the bridge loan, at Guild Mortgage, Fairway can't do the new purchase. They both have to be with Guild. So that's one thing, they really have to like their lender that they're going with because they're going to be working with them on 2 loans, like I said. It's only for primary residences. So we can't do this for investments, second homes, stuff like that. We do not want to add mortgage insurance back to their current home. So the home that they're leaving, the home that you will sell later on, we need to have at least 20% in equity in that home. So we can only borrow up to 80% loan to value because we don't want to add that on. I'm not sure if it says this, so I'm just going to say it. But one big thing about my bridge loan, this isn't the case with all bridge loans, but I can't put my bridge loan in third position. So if your client has a mortgage already, and then your client also has a HELOC or a down payment assistance second, right? Then we can't stick a bridge loan on top of those 2. The bridge loan can only be in first position. So if they're free and clear, definitely can do a bridge loan. If they just have a regular mortgage and nothing else, definitely can do a bridge loan. If they have a HELOC on the house, we can't do a bridge loan on top of that. So they would either have to pay off and close their HELOC, or maybe we just borrow from the HELOC for our down payment. There's definitely options. Like the bridge loan isn't the only thing. One thing is it is a short-term loan. So you don't want to get a bridge loan and then be like, yeah, we'll sell in a couple years. No, that's not a great idea because it's going to be due in most cases within about 6 months. We do have a 3-month bridge loan as well. If you have questions on that, it's just if we have to get a couple exceptions to get it approved, it's a shorter term loan. Credit scores as low as 720. Like I said, it's a portfolio product. So some of these things we can get exceptions on, but we can't get exceptions on all of them at once. So if we just have one thing that's not matching up, we can probably get the deal done. If there's 3 or 4 things that don't match the program, we should probably seek other options. And there are. I'm definitely going to talk about that today. We can do single family residences, PUDs, and condos. Manufactured homes and like 2 to 4 units, so duplexes and multifamily properties are not eligible for our specific bridge loan. And then we do have some debt to income ratio requirements. This says that the borrower must qualify with the new payment on the new purchase in addition to the bridge loan. So we're not counting the old payment against them. We're not counting their current house against them, but we are counting the bridge loan against them, and we're counting the new home payment against them. So they just have to fit within the DTI. Y'all as realtors don't deal with that, right? Like that's our job, but it's just, good to know. That's kind of the end of the presentation. As promised, there's some alternatives to bridge loans. I talked about recasting slightly. While I'm talking about this part, the alternatives, if you guys have questions, drop them in the chat or unmute yourself, and I'd be happy to answer questions that you have on bridge loans because I would say they're a lot easier in practice, Or sorry, when you're implementing them, it's like a lot easier and it makes a lot more sense because you have those like physical properties, and I can say the addresses to you. I can say I'm doing the bridge loan on 123 North that your client is selling, and this is for the transaction that we're buying, 423 South Street in Berthoud, right? So we can it's a lot easier for us to differentiate what the two mortgages are. Alternatives. If you don't need to sell your home to qualify, so I take a look at your documentation, blah, 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 you submit your application, and I look and, you make like 10 grand every month. Hallelujah, that's phenomenal. I wish I did. Just kidding. But you make 10 grand every month. Your current mortgage is like 2,500. The new mortgage is like 2,500. You don't have any debt. You've got money in savings. I can qualify you to put 5% down on a new home without selling your old home, without a bridge loan. So in those cases, I would recommend that we make a non-contingent offer with the minimum down and then sell our house, pay ourselves back, and then recast. I keep saying recast. I like to call it a delayed down payment instead. Essentially, if you have 100K down, but you don't have it when you close, a lot of mortgage programs, especially conventional loans, will allow you to make that down payment later on. So after you've made your first payment, Guild allows you to do it once a year for free. So those things can be helpful. Like that specific client wouldn't need a bridge loan because they've got the down payment on hand. They qualify with all of their payments and the debt to income ratio. So they're hunky dory. That's a non-contingent offer. I don't care when they sell their home. They could sell it in 3 years in that case because we haven't used a bridge loan. If they don't qualify for all the payments, if they don't have money for the down payment, that's where a bridge loan is super important. Outside of that, alternatives, like I said, if they have a HELOC already open, sometimes we can borrow from the HELOC. And then first and seconds can sometimes work as well. So if you're buying, a multi-million-dollar property, you're not going to have your house sold yet, and you want to be able to not have a jumbo mortgage. We can look at doing a first mortgage that is conventional. We can look at doing a second mortgage to cover a majority of your down payment on top. So definitely different ways to go about it. Timing, I would apply for the bridge loan as soon as you want to go see houses because you have to have the pre-approval letter for the bridge loan to make a non-contingent offer. So if they've already found the house, like it's going to take a day or two for us to go get all the documentation, do all the calculations, run it past the underwriter. So I would say as soon as they're ready to start looking for homes, they need to apply for the bridge loan. Like I said, you'll be doing the new purchase with the same lender, so it's not like they have to apply twice, but you want to make sure that that's done and out of the way. There's also a lot of moving pieces, right? So I really, really don't want a client to call me on a Saturday and say, "Hi, Jamie, nice to meet you for the very first time. We know nothing about each other. I'm making an offer on a house right now, and I need a bridge loan." That is not enough time for me to explain to your client what a bridge loan is, what their financial responsibility is, what the risks are of it. It's just not enough time. So I would definitely say as early as possible, we can do a soft credit check to see if we're in the range. We do need a full credit check to fully pre-approve them, but yeah, as soon as humanly possible. Before they've listed the home is absolutely okay as well, before you've even done a full listing appointment. Like I don't need to be 100% sure on the value until we find the right house. Cost, what are the fees rates like? Worse than a regular loan. So anytime you have a short-term loan, like a HELOC or a personal loan or a car loan, those rates are probably going to be higher than the 30-year mortgage rates that you're used to. So today and this last week have not been super nice for rates. I would say a range that is accurate is about 6 to 7% for first mortgages right now. As far as the bridge loan goes, we do look at the New York Stock Exchange and see kind of what rates are there. Right now, rates are about like 5.9 with the New York Stock Exchange. There is a margin. So the bridge loan rate is around 8 to 9%. Keep in mind, it is an interest-only loan. So just think of it as a HELOC. Like they're getting a HELOC for 3 months to be able to borrow the down payment and purchase their new home. Then when they sell, they're paying off that HELOC, and any extra money left over, they can recast or put down or just keep it in their bank account. Fees, we do have an origination fee for our bridge loan. It's about 0.75%. I feel like this kind of goes back to what I said at the beginning of like, if you don't need to borrow the full amount, I really don't want you to on a bridge loan. Like if you borrow 200K, 0.75% of 200K is way more than 0.75% of 50K, right? Yeah, you can't, question is advantages and disadvantages of a bridge loan versus a HELOC. You can't take out a HELOC when your home is listed. They won't let you. It's like they want you to get a HELOC on a home that you plan to stay in. So most HELOC companies, if you tell them that you're about to list your home and that this is because you're going to sell, they will not give you the loan. They have a questionnaire on most HELOCs that says, are you listing your home or do you plan to list your home? And if you say yes, they'll say, well, you need to get a shorter term product because, who knows if we'll get our money back from you. So I don't know why they go about it like that. Everything is risk for lenders, but HELOCs are really, really hard to get. So this is the alternative. You are allowed to get a bridge loan when your home is listed, which is really nice. HELOCs often have more fees as well, as far as origination fees and stuff go. The rate is relatively the same. I would say average HELOC rate that I see right now is 9 to 10%. So pretty much the same. Now, let's say you're good at planning ahead, which let's be honest, not a lot of clients are good at planning ahead. We get a lot of calls where people are like, hi, sorry, no, you haven't talked to me in a while. I found a house, we're going today. And you're like, you're like, okay. So if your client is good at planning ahead, I've had clients before where like they've come to me a year in advance. And I said, okay, here's what we can do. You guys have a HELOC out on your house already. Don't pull it right now, right? But let's have it open. Let's leave it open. And then when we're ready to buy, we don't have to apply for the HELOC. We already have it. And so at that point, we can pull the money out. Trying to think of other like pros and cons to one versus the other. They are relatively similar. I think the biggest thing is just you will run into hurdles if the home is already listed. And I have a lot of people who come to me that are already under contract on a home and they're contingent, but their contingent deadline is coming up. And so they apply for the bridge loan to be able to continue the contract and not get kicked out, essentially. One thing that I like to mention always is I cancel about 80% of the bridge loans that I write. So just because I pre-approved you for a bridge loan doesn't mean that you have to close on it. Let's say I pre-approve you for a bridge loan today so that we can go under contract for a closing in 2 months. And then by the time that, this month is up, your house is under contract and ready to sell. Like it's possible we can just, do an amend extend, make the dates match up, cancel my bridge loan, do a buy sell. I would say the biggest perk of the bridge loan is that you have a backup plan. So if your house doesn't sell, you can still buy. You can still get the house that you want. It just may not be the exact thing that you had planned when you set it all up. So like I said, if you don't have all the money that you want to put down and you need to borrow it all, I don't always recommend that. So hopefully that helps. Every bridge loan's a little bit different, like I said. Same thing with the HELOCs. Every HELOC is a little bit different. So one may work better for one person and not for another. I will say, this only works for primary residences. So HELOC is a really good option for when you're going to buy an investment home or a second home, because ideally you'll still be living in your house. So you won't have any issues applying for the HELOC because you plan to live in that house for a little bit longer. So that's kind of just my take on it. Is the seller taking a bigger risk by accepting an offer with a bridge loan? I would say no, as long as you're working with a reputable lender, which seems to be always the case. I would actually say it's in your seller's best interest to take that non-contingent offer over a contingent one, because essentially what I'm saying when I pre-approve them for a bridge loan is like their house doesn't have to sell. Nothing has to happen with their house. We can close. We don't need anything else. We can close. So I would say it's a huge benefit to a seller. And I've even had people, I had one this month. He's buying and selling. His buyers, he's under contract to sell his current home. The buyers of his current home are also contingent. We love contingency trains, right? No. So he got a bridge loan so that he could continue to purchase his new home. He's now pressuring his buyers because they haven't sold their house yet. So he's just waiting for them to get under contract so that they can close on his house. He is like begging them to apply for a bridge loan because then they could close on his house and then they could have more time to get their house under contract. So I would say it is beneficial for sure. We can write 30-day closings with the bridge loan, whereas if you're accepting it contingent, so much can happen, right? Like even if you're accepting an offer and you're like, okay, this buyer needs to sell their home, but they're already under contract, that's totally okay. Well, if their deal falls out, then your deal falls out. So if you have a bridge loan option as a backup, nobody's deals have to fall out. We can still close and they can sell their home later. So I would say no more risk to your seller than accepting any other offer. Just make sure that pre-approval is good and sound. Something I do is I like to get things underwriting approved in advance. That way you don't have to take my word for it. Like the underwriter's already gone through the file. If I miss something, doesn't matter. They've already reviewed it. So I would say definitely not any more risk. I would say accepting a contingent offer is more risky than a bridge loan. Good questions, guys. Trying to think of FAQs I deal with these a lot. Okay, what happens if, yeah, absolutely. What happens if you don't pay off the bridge loan in time? So I talked to you guys about the fact that the bridge loan is a short-term loan and we have 3 to 6 month options. When I say that though, if we were to close today, it's April 22nd, if you're watching this as a recording, if we were to close today, your bridge loan wouldn't be due in July. Your bridge loan has 3 payments till it's due. And just like your regular mortgage, we're going to skip the month you close and the month directly after. So if we're closing today, April 22nd, you as the buyer would not have a bridge loan or a new house payment this month, April. You wouldn't have a payment in May. So your first bridge loan and new house payment, if you haven't sold your house yet, so we're assuming that, your first bridge loan and new house payment would be in June. So in that case, then you'd have June, July, August, and you would need to pay it off by September. So that's something. We do require our clients to have some sort of reserves. So if you do have absolutely $0, we don't feel like it's a good idea for you to take on the risk of a short-term loan like this. Because if you borrow 40K, aren't able to sell your home because, any number of reasons, like I just don't want you to have to deal with something stressful. Your mom is in the hospital and you can't sell your house now. Like whatever happens, I don't want you to be stuck with this $40,000 to $300,000 loan that comes due in a couple of months. Like I either want you so sure that your house is going to sell in that time, or I want you to have a backup plan. I want you to have a contingency plan. And that's just what I teach all of my clients. My motto is plan for the worst, hope for the best, right? So that's what I say too when I cancel a lot of my bridge loans. Let's plan for the worst. Let's plan for your house doesn't sell and we don't have a buyer and we're not able to close in time. Let's hope for the best, which is your house sells immediately. We can just buy, sell, and you don't even have to use the bridge loan. So I feel like it's a really good option for people to have a little less stress in their lives, to not be woken up in the middle of the night like, I hope the showings tomorrow go well, because otherwise I'm going to lose this house we really love. Like it doesn't have to be like that. I hope the showings go well so we can cancel this bridge loan and have a better option for ourselves, 100%. But it's not like we're going to lose this house if we don't sell our house in time. So that's where the bridge loan comes in the most. Guild's great. Like I said, we do our bridge loans in-house. So it is a portfolio product. It's made by us. It is funded by us. There's no investor involved. So you're working directly with Guild on that. Guild's been doing mortgages and mortgages only since 1960. So we definitely know our stuff. And I personally like working here because I feel like, I don't know, I just feel like my people do a good job. If anything's ever messed up, if a ball is ever dropped, like I just feel like accountability is always taken and a solution is always found. So I think Guild is definitely a good option for bridge loans, but most banks have bridge loan options. I think it's just a good conversation to have with your preferred lender and say, do you have these products? Like, do you have this option for clients? Because yeah, unfortunately, the flip side is I had someone reach out to me a little bit too late in the process this last month. They were under contract for a home and couldn't get their current home sold. And I was not able to approve them. So they weren't able to get the house that they wanted. They had to terminate on it. And honestly, for me, that's heartbreaking. Like, I would do anything to get them approved if I could. Now, if they had come to me a month or two ago when they were talking to their real estate agent about listing, and I could have advised them in a couple different things, I wouldn't have had to turn them down. They just came to me 3 days before their contingency was going to terminate. And so, yeah, just to go back to that question from before, the sooner that you talk to a lender about planning to buy and sell, the more options you'll be able to pursue and the more comfortable that you'll feel with those options because you'll have the time to get educated, review those pros and cons, and decide if it's worthwhile. Like, I have another client who will not do a bridge loan. Like, they've lost out on 3 different houses because they were just like, I don't want to do it. It just sounds like too much risk to me and I just don't want to do it. Totally understand. She worked super hard to get her home under contract. Now they're under contract and they're going to close. So it's definitely not for everyone. But my biggest thing and the reason that I do these Q&As is options are power. The more that the better off you are to help your clients to get more deals, to get more offers accepted, to handle tough situations. Like I said before, let's say you're the listing agent and you have an offer, and you're getting close to closing, and all of the sudden they call you up and they go, oh crap, our buyer's terminated. What are we going to do? Can you guys extend your closing 45 days? What can you do for us? And you're like, my guys are supposed to close next week on their own home. Like, what do you mean? What am I supposed to do? That's when you call a lender like me, like your preferred lenders, like whoever you have in your pocket, and you say, hey, can you save my deal? Either with a bridge loan or less down payment and a recast. Like, what can you do for me to save my listing? Like, this isn't just for your buyers. This is absolutely for listings as well. Okay, I've taken up 30 minutes of your life today. If you have more questions, please drop them in the chat. I'll tell you right now while we're wrapping up, I do have a promo going on right now for any listings that you have that you're trying to push, and for any buyers that you're having a hard time getting under contract. If you reach out to me and have a chat with me, I will happily offer to pay 1% of their interest rate for 1 year. This has to be for qualifying clients. I can't do this with down payment assistance. I do a lot of down payment assistance, so that's why I mentioned that. I can't do it for the bridge loan either, unfortunately. But any new mortgage, conventional, FHA, VA, jumbo, I can pay 1% of their interest rate for 1 year. So what that means is it's a temporary buy down, it's lender paid. So your seller's not paying for it, the buyer's not paying for it. We're simply taking care of their part of the payment that would be about 1%. So that just helped one of my recent bridge loan clients feel like they could afford the bridge loan that they were taking on. And then it's also just super helpful. If you can go from a 6.75% interest rate to a 5.75% interest rate for the next 12 months, it's thousands of dollars in savings. So it's something I definitely recommend. And I'm always happy to offer that to any clients who are unrepresented or having any issues getting under contract or getting the home sold. I'm happy to offer that incentive. So thank you guys so much for joining me. If you have any questions, I'm going to be posting the recording on YouTube. Last week, we had a Q&A with an appraiser. That's up on my YouTube page as well. So definitely tune in and always feel free to reach out to any of these Noco pros that we have on, myself included, if you have any questions now or in the future. Thanks, guys. I'm going to stay on for a couple minutes just in case you have questions. But yeah, check me out on YouTube. It's just Jamie Laskie Loans. And have an awesome Friday. Absolutely, you guys. Thank you for joining me. Otherwise, it's just me talking to myself.